Hello, welcome to the Invest in Value channel. I am Victor, and today I wanted to talk about the S&P 500, what it looks like it'll do in 2022. It looks like it's going to have a negative return this year, a significant one, and I'd like to go through that with you. Before I jump into that, let me go over the scorecard of what I'm looking for in a good investment. First off, I want to know that I'm getting a discount on that investment. I don't want to pay fair value. I don't want to pay a premium. I'm looking for a discount on that investment, whether it be a stock, a bond, a cryptocurrency, or real estate. I want to know that the company, or in this case, the index that I'm buying, is well operated and performing well. And then last, I want to, I challenge myself for every stock that I own, every investment that I have is, would I buy that today? Would I buy it again? Once a quarter, I want to go through that thought process. If the answer is I wouldn't buy it, then I should sell. Why would I own something that I wouldn't buy again is the challenge that I make sure I use that so that I get rid of maybe positions that are not going to perform well going forward. I kind of feel that way, but for some reason, there's some apprehension there. Hey, I got to get that out of my portfolio. So if we look at this ETF over the last 5 years, it's been a solid return, 91% over 5 years. So that's a great return. I've owned the VOO for more than 10 years. It's been a place where I could just put money away and kind of just completely be a passive investor. And as we move in kind of and shrink the timeline, over the past year, it's only gone up 8.8%. So it went from returning, 15 to 20% per year down to 8.8. And if we go year to date, it's gone negative. So it's not a comfortable investment for me. The reason for it is, will we be in this negative appreciation or depreciation of this particular index fund for a year, for 2 years? For sure, it's down year to date. And the news out there isn't improving. We have high inflation. The Fed has to try to control that inflation. They're doing that by increasing interest rates, which are going to cause a lot of other outcomes. I think real estate's going to slow down. So you're going to see property values go down. You're going to see, I think the real estate markets really have a couple of shock waves go through it. And you'll have other, industries that are affected by higher interest rates really be affected. But overall, I think the, 2022 is looking like a negative year for the S&P. And as an active value investor, I'm looking for how can I beat the S&P? How can I have a positive return this year? And that is where I've been for really the last couple of months, really heading into the end of 2021, beginning of 2022. I closed some of my positions thinking, okay, the S&P can't go up forever. So I sold some stocks, created some cash. And I continue to do so. I really am looking at my stocks. I'm selling some of my VOO position so that I can create some liquidity to look at alternative investments for this year and potentially next year. Okay, so the S&P for the last 5 years is shown earlier. It's up 91.05%. So that's about an 18 per year return. Phenomenal. Excellent. But you really begin to see that it's fading fast if you look at the 1 year price increase of this S&P index, because the return's only 8.8%. And then when you look at year to date, we see that it's gone negative. So the VOO is the number one ETF for the S&P. And you can see that a lot of people are, beginning to think about where the stock market's at, because they had a lot of new investment into this ETF. They attracted more than $23 billion of investment just year to date into this ETF. The ETF pays no dividend, so there's no income there that we would expect. Guidance for 2022, if I use just the first quarter and a few days into April as the trend for 2022, just do some math, divide that by the number of days we've covered, multiply it times 365. I would project that we're going to be down on the S&P minus 23.3%. That is a big number on the downside. Again, it's funner when it's going up 18%. And 23 to me seems realistic. If you've been going up 18% per year, falling 23% is realistic. The bad news that exists today, it's kind of been the bad news we've had this year. We have high inflation, higher interest rates. We've got a war. And now a new wrinkle is the China lockdowns with COVID. China deals with COVID in a different way than we do in the United States. They just lock down their economy. I think that's going to send some issues down the road on the supply chain from China over to the US, supply chain issues that will affect production in the United States and so forth. So the S&P has no path that I see where we could say, if this happens, the S&P is going to go positive and have, a positive yield. I just don't see that any path, but you can see multiple paths of the bad news is really going to affect the S&P and we're going to have a negative year. So rather than just, accepting a negative year, I'd rather take action. I'm an active value investor. Active means take action. So I'm looking to diversify into bonds. Bonds are not as interesting. They're pretty stable. They're not going to lose a whole lot this year, but they're going to pay you a good yield in the form of dividends. I'm going to buy stocks that perform well during recessions. So good old fashioned staples, good dividend paying stocks, good profitable stocks that are just going to keep chugging along, and try to buy some stocks that are paying dividends. I think dividends will be appreciated even more as we head toward negative index changes, because that dividend is meaningful. If you could see a realized gain in the form of a dividend, I think that is meaningful to a portfolio. And psychologically, I like seeing that in my portfolio. So coming back to my scorecard, and this is specific to the VOO, the ETF that Vanguard provides. Am I getting this investment at a discount? The answer is no. I'm not getting it at a discount. I think it's a well-operated index. I have a high regard for Vanguard. I like them because they have such low expense ratios on their mutual funds and index ETFs. But last question is, would I buy this stock today? No. As a matter of fact, I'm selling some of my VOO. It's a pretty good position, and I'm putting that into cash, and that cash is probably going to end up in a bond, or it'll end up in an alternative non-stock investment. Because I think that, for the next year, if you want to outperform the S&P, you can't be overweight the S&P. You have to look for other ways to outperform that S&P. So my video is for entertainment purposes only. Not recommending that you buy any specific stock, security, ETF, or investment. I like to share, my experience with investments, and hope you found it interesting. So thank you so much for watching this video. I hope you got something out of it. Please do me a giant favor and like my video. Consider subscribing to my channel and click that bell to receive notifications. Thank you again, and good luck trading in 2022.